This week's presentation will be on the economic indicators by Chad Zelmer. Leading economic indicators are statistics that give insight into the economic health, business cycles, and the status of consumers within an economy. They are used to give us some idea of what is coming in the future as far as the economy is concerned. While there are several different indicators to help predict this, today we will focus on 5 of them. The first one is the unemployment claims, which is also the leading indicator. These claims are measured weekly. Since the pandemic, the amount of unemployment claims drastically increased. Since July of 2019, unemployment claims were fairly equivalent to where they are today. However, once the pandemic hit, the amount of unemployment claims skyrocketed to over 6,137,000 claims. Within the last couple of years, the number of claims has gone down, and recently last week dropped down 2,000 further to 229,000 claims. This points out that it is a tight labor market right now, which means that the United States is even closer to full employment. According to the Conference Board, consumer confidence is dropping. What we are seeing in the United States is the interest rates have increased, causing less people to buy homes and cars as well as other major items for their home. Prices have increased on materials since the start of the pandemic, so less people are doing more major house renovations right now. Gas prices have risen, which is causing less people to take vacations or long road trips. Inflation has paid a big part in people's spending less money today. Looking forward towards the end of the year, consumer spending is predicted to continue to drop. As the image on this page shows, consumers are not feeling as confident in the economy right now as job rates are still up. Building permits were at the highest level ever, over 2,419,000 permits in 2006. Then a recession happened and dropped the numbers in 2009 to the lowest within the last 60 years to 513,000. The numbers have increased since, however, the pandemic did cause the permits to drop and again before slowly rising up. Today, we are seeing the lowest number of permits being obtained since September of 2021. The rate dropped at 7% in May to 1,695,000 permits. Economics are expecting a continued drop in building permits. While up from the pandemic, the forecast is not looking promising. Changes in inventory are usually an indicator for the performance of the economy. At the end of 2021, coming into the new year, we've seen a drastic increase of changes in inventory. The pandemic showed scenes at grocery stores similar to the image on the screen. Inventory changes were similar to that of the last recession. We've seen a spike in the end of the year of 2020, but again it drastically dropped in 2021. Currently, we have changes in inventory of $149 billion. However, that number is forecasted to drop to $45 billion by 2023, which could mean several more shortages of supply will be happening. Finally, we come to the stock market. A company's stock price represents the company's expected earnings. The overall stock market is measured daily. When stocks are up, companies expect future growth, and when they are down, there is a lot of uncertainty. This year's highest total was in January at 36,952.65 points, and it's been at a steady decline since, which as of today was at 31,485.27 points. The forecast within the next 12 months is that the stock market is going to continue to decline to just under 27,000 points. The short-term future appears that we are entering a recession. While the job force may be on the right path, the rest of the indicators are dropping. It is part of the reason why people are spending less money like they used to, and shelves are starting to empty. It is also the reason why the stock market is continuing to drop. A recession is defined as a decline in economic growth. If things do not turn around, we will see people lose jobs, businesses close, and unemployment claims increase. We will also see values of homes drop. These next few years will be interesting to see how the United States turns around to overcome the potential recession.